The key takeaway from Powell's press conference was his strong pushback against the media's alarmist tone regarding a potential recession and the resurgence of inflation risks. Powell's tone and responses aligned with the Trump administration's policies, signaling that the Fed and the White House, meaning Powell and Trump, are now on the same page.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning. Picture, if you will, two conversations. The first one is between Trump and Powell, and the second one is between Trump and OPEC plus, including Russia. The first one goes like this. Chair Powell, if you lower rates and inflation is under control, I will do what I can to get oil prices down and keep inflation under control. The second conversation goes like this. Trump to OPEC plus, including Russia. If you lower oil prices, I'll weaken the dollar to help your emerging market economies, and we'll let the price of gold go up to make up for the lower prices in oil. I'll also keep shale oil out of your hair, and I'm not going to sanction your oil anymore. Picture those two conversations. We believe that is what went on behind the scenes, and Trump loves these type of situations. And I believe yesterday's conversation, yesterday's conference, yesterday's outcome of the Fed Open Market Committee was the fruit of that conversation. The bottom line is tariffs and tax cuts have been the sizzle here. Tariffs play to the base, tax cuts play to the base. But cheap energy and a weaker dollar are the stake, just as Jeff Besant has advised. Trump, we think, just got Powell on board last week. And that's a paraphrase of a statement we made January 24th. We're going to get into what happened yesterday presently, or what we call the new Powell-Trump Accord. Let's start with the markets. 10-year yields are down 4 at 420. The dollar is 103.83, up 37. The S&P 500 is 56.57, down 18. The VIX is 2041, up 52. Gold is down 14 at 30.34. Silver is 33.31, down 48. Copper is 506, a little offered under unchanged. WTI is 67.48, up a nickel, up a dime. Natural gas is 427, up a penny and a half. Bitcoin is 85,300, down 1,500. Palladium 949, down 9 and change. Platinum 988, down 7 and change. Gold, silver up at 91 again. That's disconcerting for silver people. Soybeans are 995, down 2. Corn 454, up about 2, and wheat is 566, down almost 3. All right. These are the stories we put out yesterday. Powell signals Trump policy alignment, which is what we're going to elaborate on in much more detail here. Silver report, increasing risks of a short squeeze in London, we put out yesterday. We stand by that. Founders, the casino is open, gold exotic option primer, and a bank, the video version of the silver report. Up top there, it says at noon today, there will be a new post, premium post called Gold Exotic Option Primer. The casino is open. That will be a version of the Founders, a little bit less wonkish, a little bit more easier to read. Okay, there's the homepage. Silver report, the mining special, which was well received, and the Goldfix PM post. Here we go. Yesterday was the Fed FOMC. Yesterday's rate decision was no surprise to Fed watchers. However, the Fed's decision to aggressively reduce the amount of bonds it would sell into the market as part of its quantitative tightening program was more unexpected, or at least the size of it was. Taken together, these moves signaled a dovish stance, with Powell acknowledging stagflationary pressures and financial tightness as justification for his actions. But that's not the headline. The real story is Powell's press conference pushback. The key takeaway, what's the next picture? Oh, there you go. We're working on our slides here. The key takeaway from Powell's press conference was his strong pushback against the media's alarmist tone regarding a potential recession and the resurgence of inflation risks. Powell's tone and responses aligned with the Trump administration's policies, signaling that the Fed and the White House, meaning Powell and Trump, are now on the same page. There may not be direct coordination, at least not visibly. That would likely fall under Scott Bessent's arena. However, based on Powell's responses to key economic concerns, it's evident that there is now a working alignment between Trump's administration and Chairman Powell. Evidence. Well, Powell's responses on three major topics indicate this shift. That chart you're looking at there, that's courtesy of Zero Hedge. That's the UMich inflation expectations. And you can see that it has a partisan bent. And we'll talk about that in a second. The three major topics that were discussed during the presser. First was tariffs and inflation. They're kind of the same thing right now. Powell acknowledged that tariffs have an inflationary effect on the economy. He also noted that the Fed accounts for the risk of reciprocal tariffs from other countries in their math. His message was clear. The Fed sees the tariffs, understands their impact, and is not reacting with alarm. The subject of Powell's response, we have the data. We're monitoring it. No need for panic. Recession risk. Powell dismissed the press's increasing concerns about recession as overblown. He stated that the workforce is stable and the economy is on a better track, not necessarily great, but improving compared to what it was under, let's just say, Yellen. He called out the excess of Cassandra-like warnings about a looming downturn. A historical note, when stocks were crashing in 2022, the media ignored recession risks and instead dismissed concerns with the narrative that, quote, talking about a recession creates one. This peaked with the infamous vibecession concept, a claim that negative sentiment, not economic fundamentals, defined recessions. That argument, while interesting, was clearly partisan, or it was framed in a very ideologically partisan way. Fittingly, the left-leaning press is now talking about a recession with no qualms about creating one. Because if you talk about it, you could create one. And gone are the calls for calm and labels such as vibe creation. The hypocrisy and water-carrying behavior among these types is so thick, you can surmise their brain cavities have far more space than the gray matter rattling around inside of it. The reduction in QT should further reduce real recession risks. That's the math that comes out of that, according to him. We'll get into the merits of his argument in a second. Inflation expectations and market stability. That's the third thing. So it was inflation, recession, and actual expectations of inflation. Powell downplayed the University of Michigan inflation survey, calling it an outlier and unreliable. He did not say partisan. We're saying that. Zero Hedge is saying that. It is partisan. Okay? But that's, neither here nor there. It just is. The subtext here is what we're about to get into. It's important. Powell was saying the UMich survey has become more politically biased over the years. Take a look at that. Now, we're not going to say it's not biased. Oh, if there's a Democrat in House, there's going to be high inflation. And then the UMich survey, all the Republicans will say, see, there's going to be high inflation. Well, guess what? There was high inflation. But now look at the cross, the hard cross and the slope of sentiment right after Trump gets elected. That's a bullshit indicator now. It may have been a bullshit indicator before, but it's a mountain of bullshit now. Okay, the data shows that inflation concerns in the survey tend to rise when a Republican is in office and decline under a Democrat, even if economic conditions are the same. This aligns with Powell's broader message. Inflation risks are real, but not out of control. The economy is not on the brink of crisis. He did use the word transitory again. So you've got to take that with a grain of salt. But there you have it. The dot plots from the meeting were hawkish. What's the next chart? There we go. The Fed's tone was mixed but strategic. The dot plots from the meeting were hawkish, signaling that the Fed remains aware of inflation risks. However, the QT reduction was very dovish, signaling an easing of financial conditions. So he ain't easing rates, okay, because of inflation. He ain't raising rates because of the economy. He's backing off on QT. So that's the other lever that he has. And plus, he doesn't cave to Trump when he does it that way too, right? Anyway, the press conference itself was neutral to stable, meaning what he said. But Powell's firm pushback against media alarmism suggested that, one, Powell believes he has the situation under control. That remains to be seen, but he's conveying that. Two, QT reduction is effectively a form of QE based on how the market reacted. It's a slow unwinding of previous tightening. And three, or put it this way, it's a slowing down of QE unwinding. They call that a tapering. All right. Three, Powell and Trump, this is our take, are in agreement, implicitly or explicitly, on the broader economic strategy. Trump and Powell are not having a barbecue together. They're not going to parties together. Okay. And Trump may be more ideologically aligned with, Powell may be more ideologically aligned with Yellen, but her economics sucked and we paid the price for it. And Powell is going to, I think, work with Scott Bessent. Anyway, the emerging alignment between Powell and Trump echoes concerns Powell voiced in the previous administration. Back then, Powell would occasionally say about Yellen on fiscal policy, noting, quote, our fiscal path is unsustainable. We're spending too much, but there's nothing I can do about that. Those are things that he said before. Now Powell is signaling something different. I'm not going to lower rates more than necessary. For those worried about rate hikes, that's not happening. I see the risk of tariffs. I see the risk of Trump, and I'm aligned with the bigger picture. This is a shift in tone. Powell is essentially saying he's going to give Trump a shot. What this means for Trump's economic strategy, well, it's actually pretty important, and it's very key. We've been saying for over the last 2 months, when you go back to what Scott Bessent has said, that forget all the news and all the press and all the money that's being made clicking on clickbait headlines. We need a weaker dollar. The world needs a weaker dollar. Okay? We need a weaker dollar for mercantile purposes. We need to export more than you import. We need a weaker dollar so emerging markets can compete on a more fair playing field. And we need a weaker dollar, well, because the weaker dollar just inhibits us from competing on that more level playing field. We need lower oil prices, because if you give everyone in the world lower oil prices, as an American, I firmly believe that we'll do better with that than anyone else. The cheaper energy is, the better we do, because of the innovative and aggressive entrepreneurial strategies that we employ. Government is aligned with the economy when that happens. And this handshake of sorts, called a touching of swords, is fiscal space for economic stimulus. If Powell is holding rates steady, here's what I mean by that, and loosening or reducing QT, and Trump is working the Middle East and Russia deals to keep oil prices in check, then Powell won't tighten aggressively. That opens the door for Trump's broader economic goals, specifically spending initiatives and tax cuts. If Trump can secure tax cuts, he can also lock in Senate support for the midterms, which extends his influence well beyond the critical first 100 days of his new term. The big question is Powell right? We're not canonizing Powell just because he's aligned with Trump. We're simply noting the reality. The Fed, the White House, and the Treasury are not at odds with each other right now. And this is a major milestone in Trump's effort to realign the economic engine of the United States. Whether it works or not will depend on inflation, growth, market reactions, and the data. Global conditions are also important. Another pandemic, who knows, you know? But for now, Powell and Trump are rowing in the same direction, a sharp contrast to the dynamics of previous years. That's it. Now let's talk about what it means for the markets. Well, stocks, this is a 15-minute chart. Okay. Let's go to an hour so you can see yesterday's behavior. All right. So Powell starts here, and you can see the dollar at 2 o'clock dove. Now let's work this way back up. In a vacuum, that looks bad, but we'll see. On the top right-hand side, you've got gold, big hour up, new high, and then trailing off a little bit. Lower left-hand side, stock market, big spike and back down. Lower right-hand side, 10-year yields, big dip and continuing lower. Now, those four markets taken together say recession, okay? They say stagflation, depending on how you look at it, right? So what did stocks do? They rallied on the news. They cheered. They agreed with everything I just said, okay? Right? The dollar dipped, agreeing with everything that I just said. Gold rallied. That's what I just said, right? As stocks rallied. That's what I implied. 10-year yields dropped. That's what I implied. Okay, now we go to today so far, and you see this. The dollar's back up. That's worrying, but not panicky. Gold is down. Well, that's nothing until we see what stocks are doing. Stocks are back down. Well, that's recessionary then. Gold's down a little bit at all-time highs. Stocks are down back to where they were. And then 10-year yields are even lower. Now, you could take that as positive. You could take that as recessionary. But it is a dislocation. So we have to see how the day ends. We think there's a lot going on in Europe. We're not sure exactly how Europe is factoring into this, but we have to pay attention to that. Oil is unchanged, so it's not a Middle East issue, right? It's a tough call. We're going to have to see. Let's pull up gold. The question you have to ask yourself, if what I just said is true, if what I just said ends up being true, while we're waiting for the daily to come up here, is are you happy with gold $300 lower for the economy to get on the track that Powell needs to be on? And I am. Am I happy with gold $1,000 lower? I am not, right? But the reality of it is, if you look at Trump, he's got basically three balls in the air, or three negotiations in play. One is with the domestic side to get aligned with his macroeconomic policy. The other is with the international side. I'm lumping the Middle East and oil in with Russia and the Ukraine together, right? And then the third one is actually with his own senators. You know, come midterms, they're going to abandon his ideas if it's re-election time, right? They're up for re-election, and if it's not working, you know, screw it. He becomes a lame duck president. So domestically, I'm looking for those three things, movement in those three things. And I saw, again, it's only the first data point, but it's a big fat dot. And it says that either Trump is an idiot, and we do have inflation problems, which he was before, but I believe that he was kowtowing to ideological concerns, or Trump has had a conversation with Scott Bessent. I stick by that. In the Middle East, in the geopolitical sphere, well, I think there's a lot of unknowns there, and either Trump is playing 3D chess, and he's doing a good job of it, or Trump is not getting closure and just attacking constantly, trying to get someone to bend. And you know what? That's his style, and it might not work, but so far, you're seeing real progress. Europeans are not happy with that progress, right? The Middle East, Iran is not happy with that progress, but I think the players that count in this equation are happy with it. The third one with the senators, well, that's dependent on the first two. And back to gold. Gold is $11, $12 lower. And there's the chart. It's ahead of trend, right? So the market should be back in this area here. Market should be at 29.50. Should be, but that's the idea. Watch for I don't have the moving averages up, but watch for the 50-day average moving up. The market could touch that and repel it one way or the other. I don't know. Silver is the more difficult, more disturbing thing, starting with copper, right? Copper has done well. You look at that and you say, well, why is copper up? Well, copper is up because stocks are up, right? This is copper yesterday. Oh, things are going to be fine, right? But they also have the effect of the China stimulus or the helicopter money that's coming. So that might be supporting copper as well. Plus, the tariffs are supportive of copper. They just are. That's the inflation. That's the stagflationary aspect of it. Which brings me to silver. I don't know. I mean, I know, but it seems exaggerated. I don't know. Why is silver softer? Why is silver this soft? Well, I mean, hold on. Wrong number. Anyway, well, I'll trot out the usual ones, which are right. People sell silver to buy gold. Fine. People actually sell silver to buy copper when they're long gold, but it's too much. I feel like I don't want to say manipulation, but I feel like remember yesterday's report? I know that there's a problem with physical in London. It's not available. They can't get it in time, and they keep kicking it down the road. I think the paper mache market is holding silver back a little bit. I'm going to say a little bit. Based on the SLV, PSLV stuff that I saw that Semper Vigilante did and others, it makes a lot of sense. They're robbing Peter to pay Paul. And as long as they can keep the spot price in check and buy some time, they're betting on people to liquidate their silver holdings. So to the extent, if you're a public citizen and you're buying silver or you're long silver, if you can avoid selling it, that makes it harder for them to retrieve scrap. On that note, I am I'm locked in. I'm purchasing a monster box of maples today, and I'm purchasing a dozen gold eagles. So I'm doing my part today. I think that's it. Let's pull up if there's any more data today. Friday, nothing scheduled. Today, existing home sales. Well, those are going to come out in about 3 minutes. I'm not going to stay online. I'd love to. But again, Gold Exotic Option Primer, the casino is open, is published today, March 20th at 12 p.m. I'm Vince. Have a great day.
Well, thank you to Vince for this morning's report. Sure hope you enjoyed that one at home. And I will just say I sure enjoy watching Vince myself, and darn grateful that it's worked out with this setup that we have here. And glad to have all of you joining us every day, and hopefully it's been helpful along your journey as we watch the metals continue to rally, and certainly started last year and continuing on. And before we wrap up, we'd just like to thank Fortuna Mining, who was our proud sponsor of today's show. And Fortuna actually just updated their mineral reserves and mineral resources estimate, which included inferred mineral resources of 2.2 million gold equivalent ounces, measured and indicated resources exclusive of reserves of 1.5 million gold equivalent ounces, which were increases of 29 and 36%, which were the result of infill drilling and the discovery of a new inferred resource that represents 741,000 gold equivalent ounces. Proven and probable came in at 2.7 million gold equivalent ounces, which was down 11% on the year, although the driver for that was the production that they had in 2024, which was record production for them, and also that depletion offset by the upgrading of resources to reserves, representing 204,000 gold equivalent ounces. Although fortunately, in terms of finding some more gold out there, Fortuna had some more news as they have intersected 7.2 grams per ton gold over 31.5 meters at their Kingfisher prospect in the Seguela mine. And they also mentioned that at the Sunbird deposit, which is really one of the most promising ones they have there, and they are getting closer towards mining.
And there, the deep exploration drilling tested the southern extent and has returned to excellent results, including 4.3 grams per ton gold over a true width of 23.1 meters. So I will leave the link to both of these in the description field below. And for a little more color on the update to the mineral reserves and mineral resources estimate, well, that one is coming your way now.
Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.